Assalamualaikum and a very good day to everyone. Welcome to our financial reporting briefing session. So today our focus is on two important Malaysian financial reporting standard, which is Mfrs 8 operating segments and also Mfrs 134 interim financial reporting. So for Mfrs 8, what company that we will be discussing today?
We are discussing about Sandar River.
And also,
we're also discussing about MW Holdings. High.
okay, for Mfrs 134,
We are discussing about company KPJ Health. High.
so first we will start with Husna. She will explain about what is Mfrs 8. So Husna, what is Mfrs 8?
MFRS 8 is operating segment requires an entity to report financial and descriptive information about its reporting operating segment. Under MFRS 8, segments are identified on the basis of internal reports that are regularly reviewed by the Chief Operating Decision Maker, which is CODM, in order to allocate resources and assess performance. Information disclosed includes segment revenue, profit or loss, segment assets and liability if regularly provided to the CODM, plus reconciliation to the entity's consolidated results.
Oh, now I know about MFRS 8. Since the CODM for both companies are different, who they are?
CODM is a person or group that allocates resources to operating segment and assess their performance. Often, this is a group chief executive officer, CEO, or a senior management committee. For example, the Sandar River High. The annual report notes that the segment performance is reviewed by the top management, which is the board or senior management, in its strategy review. While the exact CODM title may not be explicitly CODM, the CEO and a group management team act in that role. For UMW Holding Berhad, in UMW Integrated Annual Report, the President and a Group Chief Executive Officer reviewed and allocate resources across its diversification.
Okay, miss, we have a various type of segmental report, right? So, what is segmental report used in UMW and Sandar Company?
Two types of segment reports. Under financial reporting, there are generally two ways company present segment, which is the first one is by business or operating segment, which is by product lines or division. Next is by geographical segment, which is by regions or countries. For Sandar Berhad, in its 2024 annual report, Sandar breaks down segment by geographical, which is in Malaysia, China, and other country in Asia. This is a geographical segment. For UMW Holding Berhad, in its 2020 Integrated Annual Report, UMW listed segment operating revenue by its business division, which is automotive, equipment, manufacturing, and engineering. UMW segment are primarily business line.
Thank you, Ms. Husna. Now I know what is Mfrs 8 and also CODM and also the two types of segmental reports. So I think we will move to Ms. Amira. So what is benefits of segmented report for both company?
MFRS 8 requires companies to provide detailed financial information about their business segments. For diversified companies like Sandar Berhad, this reporting provides essential transparency for financial statement users. The first benefit is clear performance evaluation of different business units. Segmental reporting allows users to assess each business division separately rather than relying on consolidated figures alone. This detailed breakdown helps identify which segments are driving growth and which are underperforming. For the Sandar example, this segmental report shows distinct performance pattern across divisions. Firstly, UMW division demonstrates strong growth with the profit before interest and tax increasing 99.8%. For motor division, faced significant challenges with the profit before interest and tax decreasing 26.2%. Lastly, for industrial division showed relative stability with a 9.6% decrease for the profit before interest and tax. This level of detail reveals that while UMW automotive business in Malaysia performed exceptionally well, the motor division experienced substantial difficulties in competitive Chinese market. The segmental analysis also shows how the company's diversification strategy provides balance, as the strong performance in one division help offset challenges in another one. The second key benefit is effective monitoring of management strategic decisions. Segmental reporting enables users to evaluate whether management strategic initiatives are delivering expected results. It provides measurable evidence of how acquisitions, investment, and strategic shift impact different parts of the business. For the Sandar example, the strategic acquisition of UMW Holdings is clearly reflected in the segmental report through several key indicators. UMW revenue increased 75.4% from the year 2024 to 2025. Geographically, Malaysia's profit contribution rose dramatically from 20% in year 2023 to 50% in year 2025. This strategic move reduced the company's reliance on international markets while strengthening its domestic market position. The segmental data provide concrete evidence that UMW acquisition has successfully enhanced the company's market presence and profitability. It also demonstrates management ability to execute strategic plans that create tangible value for the organization.
Thank you, Ms. Amira and Ms. Husna, for the explanation about Mfrs 8 for post company, which is Sangabi, Berhad, and also UMW Holdings Berhad. Now we will move to Mfrs 134. First, I will explain about what is Mfrs 134.
Mfrs 134 is the standard that guides companies on how to prepare financial report for period shorter than a full year, usually quarterly. For listed companies like KPJ Healthcare Berhad, these interim reports are required by Bursa Malaysia. The report can be a complete set, but most companies present a condensed version, which include the statement of financial position, profit or loss, changes in equity, cash flow, and a few important notes. These notes highlight major updates since the last annual report, such as unusual items, seasonal effects, new borrowings, dividend, and any significant events. Mfrs 134 also requires company to show comparison figures like this quarter versus the same quarter last year. Overall, the purpose of Mfrs 134 is to provide timely and transparent information throughout the year, so user can see changes early and make a better decision.
So, in this MFRS 134, what is the significant event and transaction?
Okay, let me explain.
I will be presenting two significant events that have occurred and entity since the end of the last annual reporting period, which closed on 31st December 2024. These events are important because they impact the company's financial position, performance, and future direction. The first one is acquisition of a new subsidiary. The first major event took place in February 2025. The company acquired a 60% controlling stake in a logistics subsidiary for 12 million. Why is this event significant? It changed the composition of the group because a new subsidiary has now been added to the corporate structure. Non-current asset increased as the investment is recognized in the consolidated financial statements. There may also be goodwill depending on the fair value of the acquired net assets. This acquisition will contribute additional revenue and profit to the company in future periods. Overall, this event has a direct and material impact on the company's financial position and must be disclosed in the interim report. The second event is nationwide product recall. The second significant event occurred in April 2025 when the company initiated a nationwide recall of one of its electronic consumer products due to a safety defect. Why is this event significant? The recall results in substantial replacement and repair costs, which increase expenses. The company must write down or remove defective inventory, lowering asset value. There is a risk of legal claims or compensation, which increase contingent liabilities. Product reputation issues may lead to lower sales and reduced revenue in the current period. Because this event affects both the company's financial performance and its risk exposure, it is considered material and must also be reported. In summary, the acquisition of the new logistics subsidiary and the nationwide product recall are two key events that occur after year-end. Both significantly affect company financial position and performance. These disclosures ensure transparency and help users of the financial statements understand how the company has changed since the last annual report.
I have a question. Since we use KPJ Healthcare, right, for this MFRS 134, how we can identify interim reporting for both the current and comparative financial statement?
Now, I will explain the interim reporting periods used in KPJ Healthcare Berhad's Quarter 4 2024 interim financial statements. These periods are important because MFRS 134 requires company to present both current and comparative figures for purpose analysis. For a statement of profit or loss and other comparative income, KPG present two sets of periods. First, the current quarter cover 3 months ended 31st December 2024 starting 1 October 2024. Then, the comparative quarter is 3 months ended 31st December 2023 starting 1 October 2023. For the year to date, KPG reports the full financial year ended 31st December 2024 starting 1 January 2024 compared to the full year ended 31st December 2023 starting 1 January 2023. This allows users to compare short-term quarterly performance as well as overall yearly trends. For the statement of financial position, the reporting periods are slightly different. The current reporting date is at 31st December 2024, which starts at 1st January 2024. Next, the comparative reporting date is at 31st December 2023, also starts at 1st January 2023. Years KPG compares the ending balance of the current interim periods with the previous year-end position, which is required by MFRS 134.
For the statement of changes in equity, KPJ reports cumulative figures for both periods, current starting from 1st January to 31st December 2024, while comparative starting from 1st January to 31st December 2023. This helps users see how equity has changed across the entire year, including profits, dividends, and other movements. Lastly, the statement of cash flows, current period starting from 1st January to 31st December 2024, while comparative period starting from 1st January to 31st December 2023. This shows how operating, investing, and financing cash flows have changed throughout the year compared to the prior
You
year.
can see how this standard improve financial clarity and reflect real-world business operation. Thank you for all your attention, and we will see in the next meetings. Thank you.